boys. Okay, I'm not a professional YouTuber, so yeah, don't really care. But my camera's messed up there. Anyways, we're gonna go through what the freak is going on in the market. I follow a lot of financial channels and traders, and you don't even know. Part of the reason I suck as a trader in general, and I say that word, I say it lightly because there's a side of me who is an amazing trader, okay? And then there's the side of me who is a scared little boy. And when I trade like I should, I do extremely well. And then when I trade like a scared little boy, I get wrecked. I'm not sure where I was going with that, but the point is I follow a ton of traders. I've learned all their methods, learned all their systems, and I haven't mastered any of them. Kind of like a jack of all trades as a trader. That's interesting. That's a nice little. I should rename my channel the Jack of All Trades, because I just know so many different systems and so many different styles. But this is my favorite style. I keep coming back to this style, which is having a setup where you're only looking at the open, close, highs, and lows of the daily, weekly, quarterly, monthly, yearly. If you just put those on your chart, what I used to do is I would actually go through and actually mark all that out for an entire chart. And what happens is you start to develop, when you do that, you develop a picture of where the trades are. And the trades are in the gaps between the resistances and the supports most of the time, or with the breakouts. But since I use TradingView, you got this MTF OCR, which is basically how I set this up, which is you can just have the previous daily range, open, high, low, close, and the gap get printed onto the current day. So I do that for the daily, I do that for the weekly, I do that for the monthly, the 3-month, which is the quarterly, and then I do that for the 12-month. Okay. What I've learned after learning literally hundreds of systems is that the simpler the better. The simpler the better. If you can take away all the indicators for the most part are all based off of the open, low, high, and close, or some average of them, or some statistic of them, right? Those are your fundamentals. That's why I renamed this fundamentals, because I wanted to refocus my trading habits on the fundamentals. I wanted to just get really, really good at trading the basics, because my brain can't handle trying to trade 5 different styles at one time. I used to have 5 different accounts. I would be doing theta in one. I'd be trading 13 market moves in one. I'd be trading, Sam Smarter Trader type of trades. I'd be trading, my own weird stuff, stuff that I was interested in. I'd be trading Atlas trades in another. So I had like 5 or 6 different accounts, and I was doing all these different types of trades, and I was just messing up, man, because you're watching too many indicators. You're trying to catch news on all these different stocks Atlas is putting out, or you're trying to, play options where you're putting too much in just because, it looks like the trade is good and you're not really managing it really well. So I've cut down a lot. I've basically brought it all back to the basics, just focusing on 1 or 2 really good trades, keeping everything really small, just focusing on just the basics. The open, high, low, close with a low volume profile is all you need. Is all you really need. It's all I need. Yeah, y'all probably want to put in 5 different MACDs, a couple RSIs. RSI MACD is fine if you know how to use them. But those things are lagging indicators. So the biggest thing about those is they're not going to tell you where things are going to go. They're only giving you an indication of where they've been. And so that's the biggest issue with those. They can give you setups. I think they're good on longer time frames. If you're trying to trade intraday, all you really need is the open, low, high, close, and a volume profile. Learn how to use volume profile, and then learn option premium pricing. And I go over that in some of my other videos. Tons of videos on YouTube that talk about the way an option should be priced. But I would highly suggest learning this method, just because to trade intraday or to trade short term, you really only care about these levels. That's it. That's all anybody's really utilizing. Because say you take, okay, I want to use a moving average, right? Which moving average are you going to use? Are you going to personally go back test the 8 EMA versus the 8 MA or the 8 WMA, which is the weighted moving average, or one of the 15 different types of moving averages? Not only are there 15 different types, you can use any number of periods that you want to use. So, which one is the best one? And all it's really doing is giving you a support level or breakout level, right? Well, that's what this is doing. This right here is giving you, and the only things that matter is something I learned from TikTok on Twitter, is that he says the only things that matter are the horizontal levels. Okay, so I applied that to developing most of these systems for the most part. Was just applying, just all I really care about is finding those big support levels to know whether something is bullish or bearish. Whether it moves around above that support level, I don't really care. I just want to know if that support level is there and it's holding, then I know that this is a buy. You want to be buying dips above that support. Let's take SPY, for example, today. Try to keep this video short because I lose a lot of people after like 4 or 5 minutes. But I'm trying to keep this video short. But today I wanted to talk about this SPY trade that I was looking at, and I think a lot of the good traders kind of saw what was happening here with this rebound. But I was short SPY for most of the morning, most of the afternoon, but what I saw here was that the volume here. Now I've got this set up to where it's showing you volume. It's showing you volume. I'm going to pull that back because I need this point of control to come through. But I'm showing you volume that's 70% of the volume traded for that day, or for that period, up until that period of time. So what I saw here, I was looking at it, and I'm looking at the volume, and I'm seeing the volume start to shrink down. We're sitting here in what you call an excess low, just because 70% of the volume here is traded, and then you've got some kind of got the tails here. You can kind of see that it's looking like a standard distribution or some sort of standard distribution. That's all the price action for the day is happening. Is just the standard distribution volume at certain levels. So if you got diminishing volume, and so the reason this layout I really like it is because we got yesterday's range here, and we got the open close here, and then we got so essentially what we have is the open from yesterday here at this orange line, and then we got the close for yesterday, which was Friday, right here. So SPY comes up, and what happens here at the early, and what I saw happen was that it took out, what happens a lot of times, it takes out the previous point of control, which is this line here, this blue line, this puncturing through here. They take that out, so they drive the price through that point of control, and what usually happens is price reverses off of these point of controls, and you'll see this happen on almost every time frame. I used to have a Sierra Charts order flow deal set up where I had a 15-minute chart, and you can put the point of controls on a 15-minute candle, and you'll see price just go right to that point of control and reverse back and go back down, find another point of control. So all price is doing is trying to discover that price discovery. It's just trying to discover price, and it's just constantly flowing. Well, it happens on a daily basis, happens on a monthly basis, whatever time frame you want to look at. So this is what I'm looking at. I'm looking for these confluence of point of controls. I'm looking for confluence of huge levels like a monthly close or like a yearly close or quarterly close or breakouts with these levels. And so what you see is this huge drop. I mean, just uncalled for, really, drop. But I knew it was going to happen because they took this point of control out, and then they broke the close. Friday's close. Okay, so right there I'm just going, this don't look good for the day, because the first thing it does is it takes out yesterday's point of control and then breaks yesterday's close. So there you go. You got a couple of signals here saying that SPY is probably going to dive. And then what I did was I marked this level here because you can kind of see where there was a point of control. It's kind of like a shadow point of control. I'll put that there, and I said, okay, if that breaks, which is not a huge support, which I was assuming it would break, but I was going to say if it breaks in like a 5-minute or like a 10-minute, something like that, I'm going to go ahead and just buy some puts, because I didn't buy them here I bought them more around here just because I saw this level here and I just wanted to make sure that it broke, and it did. So then it broke, but then I saw this hold, and so I got out. I was like, okay, they're probably going to try and hold this open, which was yesterday's open, and there was a point of control sitting there. So you could see 2 days ago what you call a virgin point of control, because it hasn't been touched yet. It hasn't been. They haven't felt on it yet, a little bit. They want to test it out, see if Thursday's point of control is going to hold. So you can see how this line comes over. So that's a confluence here. We're inside a weekly range. This was last week's range, this yellow box here. And this last week's open. Here's a monthly range here, this white box. So we're at the top of last month's range. So we actually have a close and a high right next to each other from last month, which is extremely bullish in my opinion. That just means that, they closed the month at the high, which is already telling me, like, if you close at the high or close at the lows, you typically say that was bullish or bearish, and not exactly in that order. But, basically you're seeing price action here for the day, all happening above last month's high and last month's close, and you're having a ridiculous sell-off on lower volume into Thursday's point of control and into Friday's open and Friday's low. So how many points of support do we have now that we've built up? So we had a pretty decent short signal at the open, just looking at it, and then we also had a pretty decent reversal signal here. And in my mind, I didn't think about anything else other than that we've got no volume, no sell volume here, no pressure to be able to push this even lower. Now you had a little gap here, so like if they did break it lower, then it was probably going to come test last month's high and close. But I just didn't see that happening just because there was just no volume. You can see the volume was actually way up here, most of the volume. So you have a little level here. We did have a little bit of a bounce here on this level. So I say all this because I go through all the crap that traders go through. I've been through it. I've been trading for a long time. In I don't know, in trader years, I think I've been trading for a long time. Most people fizzle out after 6 or 9 months. I've blown so many accounts, trying so many different systems and so many methods, and searching for that holy grail. There's a bunch of phases that traders go through. I'm still in this searching for the holy grail phase. And you know what I ended up coming up with was that I just want to go with the basics. And after going through that whole cycle of searching for the holy grail, I finally come to the realization that there is no holy grail. And even though you know this, do you really truly believe it, that there's no holy grail? And I used to always think, like, there's some trader out there that, he just knows what's going to happen. That's why he's buying, like today, somebody's buying 39.30. There was like $500,000 buy on the 39.30s for Friday on Amazon for $5. $5 a contract for the 39.30s for Friday. So does this guy know something that I don't? Like, what does he know that I don't? Does he know Amazon's going to 4,000 this week or something? Like, I don't understand why you would buy that. Now, he's probably just playing the volatility expansion. If Amazon gaps 3,700, blah, 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 it's probably going to go to 3,750 real fast. Those probably go to 10 or 20 or 15 or something on the spike. But that could be the play. I don't know. But I was always thinking, like, somebody else knows something more than me, is better than me, has a better system than me. When the truth is, nobody has any idea what's going to happen. And the only thing you can do is manage your risk, manage your system, simplify everything, have a plan. I've been doing my plan here in this journal just to try to help synthesize my thoughts for the day, create long-term plans as things are moving, as we see this rotation happening. And so that's it for today. Hopefully this gives you a little bit of inspiration, helps you out a little bit. If you want me to share this layout, I will. I've shared similar layouts before, but I don't, I can. I'll put it in the description if you want this. This is my favorite layout. I have 10 different layouts that I've tried and tested and I share, and algos and all this stuff. This is my favorite just because this is how I trade, and you can definitely try it. And if you want to see more videos like this where we're trading this style, let me know in the comments, because I'm kind of losing ideas here of what to do, because I'm kind of coming down into this area where I'm figuring out a system. So I kind of want to go in that direction. And so hopefully this helps you guys. See you later.